Good morning, traders. Thanks for joining me today on Wednesday, the 2nd of July, 2025. This is episode number 2662 of the TraderBite. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Be sure to refresh your browser if the chat box is not working in there on YouTube. Not sure why it does that, but it should be working. If I can get a sound check, that would be awesome. Um, okay, so let's dive right into the pre-market summary sheet from Convergent Trading. More information at convergenttrading.com. Also, you can follow on Twitter or x.com/conv trading, as you see in the bottom right box, which is obscured by the logo there. Um, Overall, mixed. We are falling off a little bit this morning. We've taken kind of a negative tone here. ADP did come out this morning, came in at negative 33,000 reported by ADP, which is a payroll processing company. This is the employment change. The expectation was for plus 95,000. The unemployment rate, yeah, the unemployment rate out of Europe also came in at 6.3% versus 6.2%. Um, and but the overall market condition is mixed. We have just across the board, you have the NQ sagging a fair bit, but you can see that the are these correct? Let me just double check. Yeah, they are. The RVOL RAN on this chart is those numbers are pretty outstanding here. It looks like we have strong relative range and inline volume, except for the Russell, which has strong relative range and volume. This is the second day of the second half of the year and the second day of the third quarter of the year. But the posture still mixed. I would say mixed to risk off. The S&P is in the multi-distribution profile, pretty active price discovery overnight. This is what gives us the strong range so far. What are the themes? The themes are, well, tomorrow is the beginning of a holiday, the 4th of July, Independence Day for the U.S. That's on Friday. We will be closing early. I will not, I'll actually be leaving early tomorrow for yet another trip. So I would suspect that many people will be doing the same. So we're coming into a holiday end of week, basically a 4-day weekend. As I said, ADP came in lower, much, much lower than expected, a swing of about 130,000 to the downside. The House is due to vote on the reconciliation bill from 9 a.m. after the Senate voted to pass it yesterday. Lots and lots of protests for this big, beautiful bill, which chops down a lot of the support programs, Medicaid, things like that. Japan's tariff negotiator Akazawa is arranging U.S. visit as early as this weekend for trade talks. Canada's ambassador to Washington said Canada still aims to lift all Trump tariffs as part of deal with U.S. U.S. President Trump representatives had long and productive meeting with Israelis on Gaza, and Israel agreed to necessary conditions to finalize a 60-day ceasefire. Tesla is due to report Q2 deliveries, and I'm sure you've heard that Tesla's Musk and the president have been flinging things at each other, and we saw a reaction in Tesla yesterday. It was down as much as 6.5%, recovered a little bit, dragging the NASDAQ down. It's a pretty big component of the NASDAQ, not so much in the S&P. We'll look at that in a minute, but there's a kind of a disconnect between the S&P and the NASDAQ currently, which might create some opportunity for us. What do we have left? Let's see. We have Canada's S&P Global Manufacturing PMI. We have ECB's Lagarde at 10:15 Eastern. We have the EIA crude oil inventory numbers 10:30 today. If you're trading crude, pay attention. And then at night, and that kind of tops it off. At night, we have Australia. Night my time, we have Australia's balance of trade for May and Japan's Bank of Japan's Takada speaking, and then China has its Kaikshin Services PMI for June coming out at 9:45 this evening. So let's see. I want to show you this quick heat map here. This is where we are this morning coming in. Tesla taking a pop. As I said yesterday, it was down as much as 6%. We have NVIDIA, Meta, and Microsoft basically sitting sideways. Apple taking a bit of a pop, but we're not seeing this kind of stuff in the Nasdaq so far. The volume in the S&P overnight is 146,000, which is in line with what it's been for the last 2 days of the week, relatively light or in line. The inventory is pretty much even. The range is 35.25 points, and that's it. So let's move on to look at what we've got. ES. Let's look at how value is moving. So one of the things I like to do with this chart, well, I'm really close to the camera. One of the things I really like to do with the chart, with this chart, and it's really important to track the movement of value. So on the left here, you have a volume profile. On the right, you have a market profile. The market profile is TPO based. It's based on 30-minute TPOs, 30-minute bar chart, collapsed into a histogram. And on the left, you have volume at price, VAP, or a volume profile. These generally are in line. You can see the point of control on this day is in line. Point of control on this day is in line. Point of control pretty much in line on this day. And it's really important to track not only how price moves, because everybody's looking at price, you want to track how value is moving. So yesterday we had an inside day. We had a lower high, higher low, but we shifted the point of control higher. It's pretty much in line. We create what's called a micro composite on top of that. This is the orange profile. This is basically taking both days together to see where volume has traded, and that gives us 62.39 as the composite. We're currently at 62.44. This tells us that the market is stalling a little bit here, and things are slowing down a little bit, whereas before value had moved up pretty decent. Now it's starting to kind of slow down a little bit, and generally we have a rounded top. The market doesn't generally, unless there's news, it doesn't generally go to the high and just fall right off. It tends to round off, okay? And so that's what we have. Yesterday, completely balanced trade, more on the positive side, but completely balanced. It looks like the one-time framing is intact, higher low, higher low, higher low, higher low. And so buyers are still pressuring sellers, but we've come a long way, and I'm paying particular attention how we break out of this area. The conditions right now in the ES are not so great for day trading. This is a market that has found balance. You can see it's sitting right on top of this big fat area. We're not far from the all-time high. The all-time high is 62. Let me look for it 1 second. The all-time high, 62.87, according to my charts, maybe 62.85, 75. So it's call it 62.87, and the high yesterday was 62.65. So we're a stone's throw away from all-time highs currently. So this creates a kind of a precarious situation because we generally don't run and take the high out decisively. Of course, this is all barring news. We generally have folks unloading long positions ahead of that high, so it takes a little bit of time to consolidate and create the energy needed to push through that high. And I think we're trying to get that done. This bill that's going through Congress here, this big, beautiful bill, um, is likely to help many companies make more money. And in general, the market has priced it in. It's expected to pass. If Congress changes any part of this bill, it goes back to the Senate for another vote. And that's, of course, a nightmare. And obviously, they'll miss their deadline of this Friday. It's the Freedom Bill. But overall, the market has priced this in. There's not much news flow to kind of push us in either direction. There is discussion that Trump wants to replace Jerome Powell, as Jerome is still sitting. Jerome has another 8 months or 9 months at the Fed. He wants someone who'll lower interest rates. Of course, whoever he appoints is not going to have the capability of doing that, but they can go out and talk about what they will do when they're in that seat. But other than that, I don't think there's very much to move things along. Let's take a look at the intraday chart. Here it is. We pushed all the way to 62.70, 75 overnight. We've sold off. So we are currently underneath our DGPs, day generated prices, DGPs. Um, and we've got this consolidation above. This area right here becomes my line in the sand right here. This consolidation becomes really important. Let me change its color. Becomes really important. Anything below here, which is where we are, is expected to have a bearish tilt. We are in the middle of the uh, magnet right now. As you can see, this is that purple stock zone is the magnet. We're in the magnet right now, so we are in equilibrium unless it goes back up and takes out this area I just shaded. I'm looking to sell any attempt higher today. I'm looking to sell that, and I'm looking for a break of the overnight low this morning. So that's how I'm leaning into today's market. So let's see what, oh, it's 8:15 already. Let's see what today's plan is. We are we just made new overnight lows. The expectation is to consolidate here, make an attempt at the 6250, push, retest, failed, spike, retest, fail, sets us up for a short right in here. Looking for it to rotate back through and then take out the 6235. Gives us a little bit of room to yesterday's excess low, which is right down in here into the 33. But I'm looking for that 33 to get tested and then potentially bouncing back up and holding steady. I really don't expect the S&P to run away as there's just very little in terms of catalysts to reprice right now in the bigger picture. Secondary is to open, immediately drop into the overnight low, do a quick liquidity check here, check to see if there's anybody interested in continuing to sell, or if buyers come in, we check for liquidity. We may get that liquidity, create a higher low and a breakout structure, and then we start to move back towards a full session VWAP mid, and we are now above the open, and we're likely to challenge this 6255 area to come right back in here and finish somewhere inside of yesterday's range. Wednesdays are generally expand the range, or pretty good for expanding the range, but it's I just don't see a catalyst. You know, there needs to be a catalyst to move things, to reprice things. not seeing very much in that space. For those of you asking what this platform is, it's Edge Pro X. Let's take a look at crude. Crude, we start as usual with the market profile chart. Since the drop post Iran ceasefire, we've been stuck in this range 66.42 to 64, and we've been tracking in a downtrend, one time framing down right here. We made this retest of the high, could not get there. Nice double top at the high, giving us a weak high right up here. And then we've made lower highs. Yesterday we busted through, we opened, and then we came right back in, tested the prior high right here, and then just built a consolidation right on top of the MC point of control and the magnet in this area, which is 65.50. The current magnet is about 65.46. This morning, we're gapping up again, so we're establishing one-time framing up. I'm expecting the 66.42 to be gone this morning. We did test it by a tick in the overnight session, but we are breaking out of a consolidation. How does that look in the overall picture? It looks like this in the RTH session. You can see what I expected here, to be honest with you, is a push down consolidation and a bear flag break. This is what the classic behavior would be, is a bear flag break pushing into 62.50 and 61. That's what I've been looking for all week, but this thing just will not make a move. Here's what it is in the overnight session. So we've had a nice break higher. Crude is currently open in the pit session. It's been open since the start of this video at 8 a.m. Central here in Chicago. The expectation this morning is an open auction out of range, looking for responsive selling into yesterday's high, which puts us in the DGPs at 65.80 or so. Looking for this to be a base turnaround, and I'm looking for a break, a quick lick check pullback, and a break into this large gap zone that we have above. And from here, it's really the gap mid that governs. We're looking at about 67.30 or so, the gap zone. That would be the target under scenario one. This is looking kind of bullish today. Crude is likely making an attempt to backfill the weak structure above after a double top. The secondary scenario is an open auction that squeezes the 66.43, gets us our overnight stat, a quick liquidity check above and into the gap, does not find any interested parties, falls back in, and then the key target becomes the prior settle, which is 65.45, which is the mag zone, and we're back in equilibrium nirvana zone right here at 65.50, and that's where we rest by 1:30 Central when it closes. This is crude oil. Let's take a look at NQ. NQ, once again, I mean, I could talk about the footprint till I'm blue in the face. I could talk about my trigger chart here, but really, I want to keep it focused on the bigger picture. NQ, I'm just going to look at RTH for now to see what the bigger picture is. But you can see that the NQ has really decoupled from the ES. The ES has built balance up here, and then yesterday it built even more balance with an inside day, right? But the NQ has already rolled over. And so I think there's better opportunity in the NQ because as traders, we don't make money in balance. When the market has found value and is sitting in the middle, it's harder to make money. It's likely to be choppy and it's not likely to push. In other words, there's no mispricing opportunities there for us to make money off of. We make money off of price movement, and we're seeing more of that in the NQ than we are in the S&P. So yesterday, the NQ opened in range. It left a naked prior settle, tested the point of control. You could see it went right up to the point of control, a white line there, and then it started to one time frame downwards and retested this low at 22,600 by 5 points before bouncing back up and closing at 22,693. And then this morning, it's opening below the expectation this morning. Let's change our colors. The primary expectation, all things being equal, and it's running under its own power. The expectation, well, let's go to our full session. These are, I've broken the NQ into these zones. Actually, it's not this. It's there to there and there to there. Those are the boxes we're trading in. The NQ, the expectation here is open, responsive buying into the 22,700. Get us our preset prior settle, get us our point of control from yesterday, test that area, and then roll over and then start pushing for the overnight low at 22,582. A push into continuing the one-time framing down, which is, this is the pivot bar, this is the high here, this is our first, and then today May is likely to establish one-time framing down. And so now as we move lower, our next area to check will be this low at 22,470. So I don't think it's going to get it today, but it may run to just above 2,500 before it rests. In either case, I'm expecting it to fall out of this box here. The secondary scenario is really a balanced scenario, that it's gone too far and whatever news has pushed it down can be refuted. And the idea here is we open in balance, test down, a lick check gets us back up. We're looking for an impulse after the lick check, a pullback consolidation, and then we come back into the prior settle and we basically regain the area above to finish above 22,700 in the NQ. Those are the two main ideas. Okay, I'll leave you with that. I know these are long because I'm covering 3 products where usually I cover 1, but the S&P is not as popular as it used to be. I know many of you are in the MCL, MNQ, and so on, and so I'm covering a broader swath, not only for the public, for the folks that are subscribed to my channel. Thank you for that. Don't forget to subscribe by going to ft71.com/YouTube, and that'll give you the subscribe button so you can get notified with every stream or upload. But also, this is the prep that I'm doing for convergent trading every morning in our prep channel, so that you can compare your plans, and then we can talk about how things did in the prior session, which I haven't had time for. Usually I start these by talking about what was expected, what happened, so that we can hold ourselves accountable for our plans, what happened, and then what could have been done better, so we can learn from every day. It's just these things have gotten pretty long. So good luck today. I will not be here tomorrow or Friday, but expect to have a video or a live stream Monday, Wednesday, Friday. I'm going to do my best to maintain that if I can. But Friday is a holiday, so have a safe holiday. Please don't blow your fingers off with fireworks this 4th of July. Come back. You need those fingers for your mouse so you can keep trading. Be safe. Enjoy your feast and your time with family. We'll catch you on Monday. Take care.